the way the markets have reacted, it was not impacted by the news anyways. Probably people were in on the expectation that the Reserve Bank will announce something. It's not a great deal of money. It's 50,000 crore line of credit. And remember, last time around in 2008-9, when a line of credit was announced, they did not use it. But let's just read: heightened volatility in capital markets in reaction to COVID-19 has imposed liquidity strains on the mutual funds, which has intensified, and in the wake of redemption pressures related to closure of some debt funds, the RBI has stated that it remains vigilant and will take whatever steps. And under the SLF, that is Special Liquidity Fund MF, the Reserve Bank shall conduct repo operations of 90 days tenor at fixed rate repo. The SLF, the Special Liquidity Fund Mutual Fund, is on tap and open-ended, and banks can submit their bids to avail funding on any day from Monday to Friday. The scheme is available from today, that is April 27th, and and it will be open till May 11th or up to the utilization of the allocated amount, whichever is earlier. The Reserve Bank will review the timeline and the amount. So basically the banks can avail of this facility and then on lend to mutual funds. That's why this line of credit. So obviously it has to be back to back. They have to put the money in mutual funds. They have to lend it to mutual funds. Now Milind Barve, Nilesh Shah, Ashwani, Bhatia, all of them, the entire Amphi panel, Nilesh Shah, were all on the channel, and they were only asking for an announcement. They were pretty sure it will not be utilized because it's more a comfort factor. But there were redemptions on Friday. People don't distinguish between fund and fund. All they know is that in the hour of need, we should have cash. And anyway, we know that companies have been, trying to sit on cash. You saw Asian Paints telling its vendors that we want credit. You saw Tata Steels telling its vendors. These are all large companies with a lot of money. At least the parent has money in Tata Steel case. But nevertheless, they want to move into cash. So there anyway was a requirement of cash. On top of it, a fear that when I want, my mutual fund may not give me the money, may have moved institutional investors. I doubt any retailer would have done this. It would be more HNI and corporate treasuries which would have moved towards redemption. But this line of credit announced by Reserve Bank should perhaps come in handy. Sumera, what's your sense? You track this field very closely.
Well, Lata, certainly it's going to, help in terms of giving confidence. You'd remember that even in the 2008 crisis, the Reserve Bank had offered a line of liquidity, and there was no need for the mutual funds to actually, tap into it. All it did was it provided enough confidence in the market, and that was enough. So, I'm not sure how many AMCs, I mean, Franklin would have been in need of it, but like Sanjay told us just a short time back, that a line of credit is still a borrowing. They didn't have money even for that. Other AMCs, I think, at least some of the bigger ones in the credit risk space have positive cash balances, and therefore they may not even need to avail this limit, which is why I think that amount is 50,000 crores and not longer, because I think it's just a measure to shore up confidence. Nilesh Shah, the MD of Kotak AMC and also the Amphi chairman, joins in now. Hi Nilesh, good morning. You think this is enough, what has been announced? Would you look at more?
See, essentially this is required to build confidence. In 2013 taper tantrum crisis, when RBI announced such measure, none of the mutual fund availed it because there was no need for it. In 2020 also, barring couple of mutual funds, actually only 4 mutual funds who had 4,400 odd crore of borrowing. Other mutual funds have zero borrowing. MFI has issued a press release on the same, and bulk of this 4,400 crore is just with one company. These measures are for confidence building so that investors feel that one, they can get comfort and confidence on our portfolio credit quality looking at the number, and this measures gives them confidence that there is enough liquidity in the market and mutual funds will conduct their business on a day-to-day basis normally. There is adequate liquidity to meet the redemption requirement, they should not panic and they should not bunch up their redemption. So RBI's measure is a confidence building measure. They've done this to ensure that market functions normally and investors' confidence remains on the mutual funds.
Yeah. Well, Nilesh, at the moment, the equity investors are definitely pouring in confidence. The Bank Nifty has reached 2.4% and the Nifty itself is up 2%. It's crossed that 9,300 threshold, moving towards 9,350, and that's been the traditional resistance zone. Let's see if this time around it's able to cross. Nippon Life, very importantly, is now up. In the green, it's up to about 4% higher. There must have been around 7% higher. So clearly markets taking a lot of confidence from this step, and in particular the mutual fund, the investors in the equity of AMCs. Well, Sumera, do you have still Sanjay with us? You could ask him whether if this had been introduced, if the Reserve Bank had announced this a month earlier, would he have been able to save? Do you have Sapre still on the line?
No, Lata, no. Unfortunately, we don't have him. But we do have Mr. A. Balasubramaniam, who's joining in also. Hi, sir. Good morning. 50,000 crores, a special liquidity facility announced by the RBI. How far will this go in shoring up confidence? And would you look to seek some more measures, or is this enough?
I think it's good reaction that has come from RBI, recognizing the need of providing such kind of support, especially at a time with a lot of uncertainty and question marks are coming about how mutual funds are going to manage the redemptions. So straightaway this boosts the confidence and also the access to the 50,000 crores money that is available against the corporate bonds and CPs and CDs of mutual fund for a 90 days period. Definitely I think is the one boosts the confidence and are the redemptions. So therefore, such kind of limit being available, even if it's not getting fully utilized, this itself will boost the confidence of investors and not to press the panic button and redeem the investments, especially at a time where redeployment of the same money is not going to happen at a higher rate of interest. Banks have been cutting the interest rates and yields have been falling. And this coming at the time, I think it definitely helps not just only the mutual funds, even the bond market in general for the rates to stabilize.
Nilesh, I have a question for you. You know, if this measure was anyways announced now, do you feel it should have been announced a week, 10 days ago? Could it have helped Franklin?
Ma'am, only Franklin Templeton can answer this, whether it would have helped them or not. As we have repeatedly mentioned, our credit quality, our liquidity profile is different, and each one will have to take a call looking at individual funds, credit quality and liquidity profile. We are thankful to RBI that they have announced these measures, and this measure should go a long way in giving confidence to panicky investors who are redeeming not from credit quality concern, but the fear that what if every other mutual fund also winds down their scheme or shuts down their scheme. These measures will go a long way in giving them confidence that mutual funds are here to stay and they will conduct business in a normal operation. We did see that in 2008 also, where one or two foreign sponsored mutual funds decided to shut down their liquid fund for redemption, but rest of us continued business doing normally. So this is a confidence boosting measure, and we are thankful to RBI and SEBI who have worked throughout the weekends for this.
Okay. Well, Nilesh, 1 minute. I just wanted to read out to the viewers the very crucial para 4, which explains what this liquidity should be used by the banks, and I'll read it verbatim. Funds availed under the SLFMF, that is Special Liquidity Fund for Mutual Funds, shall be used by banks exclusively for meeting the liquidity requirements of mutual funds by 1. Extending loans, and 2. Undertaking outright purchases of and or repos against the collateral of investment grade corporate bonds, commercial paper, debentures and certificates of deposits held by mutual funds. Okay, well, you know, the point is banks could have done this anyway. Who stopped them? Who stopped them from buying your investment grade paper? Who stopped them from giving loans? Bala, is this all coming down to optics? RBI is announcing it. All this could have been done by the banks anyway, but announcing it is a question of comfort, right?
banks could have done on their own, buying the securities from the market. At the same time, when such a special window coming from Reserve Bank of India, specifically addressing the current ongoing concern and apprehension that comes from the market players as well as the investors in general, this gives an additional comfort to the banks when they look at such a buying of securities from the mutual funds or lending loan to the mutual funds. Gives an additional comfort to the bank, take their extra faith on the mutual funds and provide the extended facility. I think that's what this helps. While what you're saying is right, the kind of current liquidity that's available, where the banks have been going and parking the money at 3.75% with the Reserve Bank of India, naturally they can actually go and actually lap up all the securities that could come up for sale and earn about 3-4% higher than what they normally get from the Reserve Bank of India, even a normal course of transactions. So while what you're saying is right, but definitely it's a measure coming from RBI. It's further endorsing the need of the players to step in on these kind of times and provide the liquidity.
Yeah, no, I take your point, but I think it's ultimately a game of optics. Like the TLTRO was, even in TLTRO, money was available, banks were never short of money, but the optics was that corporate bond market is getting rescued, and it indeed did give a lot of liquidity to some of the AAA and PSU companies. This is a game in optics, isn't it, Nilesh? Banks were anyway willing to lend to you all.
So Lata, we are not in need of borrowing. As I repeatedly said, even when we submitted data, this is to give confidence to panicky investors, because all investors, if they come together in one day to redeem, our portfolios are not geared for it. We have provided for normal redemptions and some contingencies. This message is to restore confidence among investors that RBI is behind the normal functioning of market, and not only for banks and NBFCs which they regulate, but for other players like mutual fund also, they will stand behind in this unprecedented time. They will ensure that normal operations of the market continues.
Oh, right. No, fair point. That has certainly helped the Reserve Bank step at exactly at the right time, 10 a.m. when trades are all reviewed, the first hour trades, and the market, it seems to be actually a trending upward market at this point in time. We'll have our technical experts in a bit. Mr. Ashwani Bhatia has also joined us. Ashwani, of course, he heads SBI Mutual Fund. Ashwani, what's your sense? How much was really the panic over Friday, Saturday and Sunday? Were people really redeeming, and do you expect this to work?
So first of all, a big thank you to Reserve Bank of India. Hello.
Yes, go ahead, please.
Yeah, so first of all, a big thank you to Reserve Bank of India. This was much needed, and I'm sure it will go a long way in restoring the confidence of investors in the market. It is also, I think, a message largely to our investors, mainly HNIs and institutions, that this part of the financial markets is safe, and they are looking at the financial markets very, very carefully. So very much needed. Coming to your question that whether there have been redemptions on Friday and whether we'll have a similar pattern today. Yes, on Friday there were some redemptions. So it depending on some the portfolio quality, or looking at the portfolios of many funds, some may have had little, some may have had more redemptions. But by and large, this is a wonderful step, much needed, and I'm sure panic that was there and we were all thinking about, it won't go forward from here.
Okay, but Ashwani, the whole gamut of events, the way in which mutual funds were attacked at the AA and below paper, does it indicate that life just gets even more risk averse? Even you mutual fund managers will get more risk averse, won't you?
So I think the big lesson that all the mutual funds the mutual fund managers and all will learn is that, whatever SEBI guidelines are, please follow them in letter and spirit. That's the most important thing. So if you are taking, exposure into a duration fund, an investor would expect that, yes, you take only duration risk and not credit risk. And if you are going for a alpha, and if you are treating debt like equity, I think this is not on, So, for example, a guy who gets into a debt fund, he's looking at a return of, say, 1 or 2% above, a fixed deposit rate. And at the short end, he's looking for a return 1 or 2% above savings bank rate. So I think, we are managing other people's money. So this is certainly, a big lesson for the entire industry. And I'm sure, going forward from here, we'll be very mindful of the fact that duration risk is duration risk, credit risk is credit risk, and let's not mix the two together and, run for yield.
Fair point. Ashwani, Bala and Nilesh, thank you very much indeed for joining us. Clearly, it's Celebration Day. The Reserve Bank has come to the aid of the party. And, ever since the markets were anyway in a bullish mode, the Asian theatre was flashing green all over, and we were towing it. And there was an expectation in the market that the regulator will step in. He indeed has at exactly 10 a.m. And since then, the rally has only gotten even more robust. At this point in time, over 2 stocks in the green for 1 in the red, and the Bank Nifty absolutely firing away. It's only not just Bank Nifty, it's financials itself. Nifty Bank itself being ably supported by Kotak Mahindra Bank, that's up 6.5%. But Axis Bank is up 4%. IndusInd Bank has been up from the word go, up about 3%. So it's like, green all over. But I'm only reading out the main Bank Nifty constituents. The others as well, which are not Bank Nifty constituents, Ujjivan, RBL, Equitas. I forgot ICICI Bank. ICICI Bank also up about 3%. HDFC up 2.5%. But the others, Bandhan, Dhanlakshmi, Canara, J&K, Indian Bank. I can go down the line. Everything is up over 2%. Likewise for the NBFC guys as well. Starting with Manappuram, who obviously wouldn't have been affected. You've got the other guys like Indiabulls Housing, Piramal Enterprises, L&T Holdings, Muthoot, Equitas, all of them up about 3%. Over to you, Surabhi. Great day for a bull.
Yes, great day. Good news all around, really. And we were just talking about it, right? It's a week of central bank action. Well, why should our Reserve Bank of India be left behind? And this was, of course, as everybody's been saying, extremely critical. And I think also the last point that Ashwani made, a very, very big lesson for the mutual fund industry as well. Let's do one thing. Markets at the day's high. Let's take a break. We'll come back with lots more in just a moment.